Hello, everyone. I hope you are doing great this morning. So, I wanted to go over Bitcoin and just overall crypto this morning. Yesterday, I talked about this falling wedge, and it played out, and it played out really crazy. It actually overextended to where I initially thought it was going to go, which is phenomenal. It even gave a better shorting position than I had initially was preparing for. But yeah, crazy about this entirety of the move. This inverse Adam and Eve pattern, I'd argue that somewhat got invalidated because it did create this uh, higher high from here, this local top to this higher high, which is rather intriguing, but that doesn't mean price is completely out of the woods. So I'm actually gonna reveal two lines that I had here, and let me just extend this out. Okay, extended out the top resistance line, and as you can see right here, it actually played out to where topside resistance was still validated. So I didn't really once this broke to the bottom of this broadening descending wedge, I kind of thought to myself, okay, well, it's invalidated. But no, actually, this was just a really orchestrated fake out. Price was kind of hanging out below the bottom here, found some support, or at least bulls and bears are kind of like stepping up to the plate, fighting for supremacy here at 18.9, revealed a falling wedge, and it broke out. And it actually broke back into this channel. But what's interesting, what happened a couple hours ago was this higher low situation. Okay, let me right, circle this right here, which is really important, and it's at an important inflection point. So 18.9, as it stands, is acting as support. Now, what's currently happening in terms of overall indications from other fast moving, slow moving averages is we're kind of on the precipice of a break to the upside in my opinion, in my humble opinion. We have a waning money flow. It's ever so slight, okay, but we have a waning money flow. I like to see this happen here. I like to see money flow sloping. That's usually the beginning of the end in regards to downside action. And since price broke back into a predominantly bullish broadening descending wedge with a higher low, that's intriguing to me. Whoops, I do not want to. Actually, I'm going to turn on all my indicators here just so you can get a better perspective on what's going down. We have legit resistance here at 20,924. Okay, so this is going to be very, very difficult to break through. And this resistance line is more fresh than this line. So I honestly think we are going to be bouncing within this particular range. It is a 4.5 range from top to bottom until we find a true break. So this is where my mind is going. If I see preferably a 4 hour, because 4 hours, as you can see, are more accurate regarding volatility and all this kind of crazy stuff. If I see a 4 hour candle close break above this line or break below this line, that will indicate where the trend is going. Now, the support and resistance indicator, which is pretty strong, created a higher low. This is actually very, very good in terms of short-term price action. And as you can see, my superscript indicator is showing green candles with a bullish engulfing candle on the 4 hour with a higher low. Usually either if it's bullish or bearish engulfing candle and you have multiple candles unable to break below the base of the bullish, in this case, bullish engulfing candle, which is at 88.8, then that means the bears have failed. So from a technical analysis standpoint, right now, from a 4-hour standpoint, bulls are in control of the market. And guess what? You are getting a 4-hour buy signal with a sloping money flow to the top. So this is where my mindset is now. Keep in mind, got viciously rejected off of the top side resistance here. Vicious, okay? So I wouldn't really be longing resistance at that point. What I truly want to see, the short, I'm done with the short. I closed out my short. It was really quick. This was super teeter-totter. It was very bipolar, if you will. It was very quick. And if you go to the 37-minute, it was perfect. Look at this, man. Oh my God. The 37-minute time frame, right at 18.9, had a green candle close above the 9 EMA, and it's just like a pump action within the next the next hour. So this was a quick move of 8%, man, crazy. Um, I was more so looking at the resistance line and when the Heikin-Ashi candles, because I like to use Heikin-Ashi candles for momentum purposes, and this is what you call a doji candle right here. I'm going to circle that. This is a reversal signal. Okay, if you see a doji on the bottom, I'm sorry, if you see a doji like going from, teal to yellow to red, and then you see a doji, that indicates reversal. Now, conversely, if you see teal doji, right? Well, teal, it's supposed to be yellow, but it was just so fast moving, it's ridiculous. Some of these indicators can't even keep up. But what stuck out was the doji candle. At that point, that's when I was setting up my short position. And yeah, it did really well. I woke up in profit. Oh, excuse me. And at the end of the day, um, I trade with trend, not against it. This was intense though. I wasn't expecting such a violent reaction to the upside. Um, like I said, bulls are not out of the uh, danger zone. Okay, they're definitely not. But I mean, if you go to the 4-hour time frame, it's a little bit more clear. On the TMA, you kind of had this like downward sloping resistance, violent reaction to break it, and that's when we saw the bullish engulfing candle really just start launching and initiating. Rather intriguing. Also, we had this hidden bearish divergence playing out. Now we're kind of seeing the tail end of it. Now if we go to the 2-hour, which is a precursor to the 4-hour, yeah, we can see it kind of like in real time. But at the end of the day, just like the money flow, just like the money flow indication, we are seeing a slope. We are starting to see slopes. Let me turn off this extended line stuff. Okay. Yeah, we are seeing this. I like to pay more attention to the slow moving average, which is the red. I like to see that kind of stuff. I want to see kind of like a bull situation, and we're kind of starting to see the beginning of that. So that to me excites me for a potential breakout of that broadening descending wedge, which is bullish. Now, the TSI is a little bit more definitive, right? The TSI is showing a cross. We had a cross right here. Gonna turn that white. Yeah. Usually when they cross up, that's pretty bullish, and momentum, stagnates and it reverses. So we had momentum to the downside, and now we created a situation where we have a higher low from the previous slope cross, which is bullish and is showing here. So price is going to continue rising as long as price is above 19,261. Phenomenal. Now we are kind of seeing a dying down of momentum. So if you go to the 37-minute time frame, which is a precursor of the 1-hour, which is how I like to front run, so far we are kind of seeing some fight back from the bulls. We had a sell signal recently, but like I said before, we are having an attempt of breaking that momentum. It's ever so slight. It's ever so slight. Now, what I'm looking for is a higher high. So far, the exponential moving averages are breaking to the downside. Price is trying to go up above the 9 EMA. So that's kind of intriguing as well. We have had momentum. These little dots is called the parabolic SAR. Usually just kind of shows where trend is. Currently price is above that, so that's also an indication of continued positive momentum. Now, this is where I like to put my stops. I don't think I've ever mentioned this on my videos, but I like to put my stop losses where these little dots are. These little dots. Yeah, because that will just kind of indicate, okay, well, momentum's breaking down. There's no point in continuing from there. So it's just really like a form of risk management. I prefer to do them on the 37-minute time frame, like I said before, because it's a precursor of the 1 hour. Yeah, but anywho, uh, so far on the MACD, we are getting a cross up. It's not perfect. We do kind of have some waning sell pressure. It's ever so slight, and um, what I'm expecting, frankly, is something like, kind of like a wane, and then like something like that. I would like to see that in the near future, so we can then kind of have like another slope to kind of work with and really dig into um, a true momentum shift on a higher term time frame. Because right now, this is a trader's market. This is a scalp and swing trader's market at this time. There's no definitive trend. We are at support levels on the daily. Momentum is waning, but like I said before in the previous daily MACD indications, we do have potential fake outs where we can have 3 days of downside, and then the next 4 days is just like bullish, or conversely vice versa. But the TSI is kind of becoming a little bit more clear. So as long as price is above 19.77 on the daily chart, then the likelihood of price pumping to the upside is higher. There was a bounce off 18.9, which I like. A violent reaction from resistance. So this is still considered um, pretty strong resistance, which is interesting. The 9 EMA is following the top side of this broadening descending wedge, so there's no true reversal at this time on the daily. It's just too early to tell in that regard, but I like to go to like the 3 hour. We're kind of having an indecision candle here, still resistance below the 9 EMA. Let me go momentum. Now this is interesting on the 3 hour. We have wicks to the upside, which indicates a slowing of momentum. So how Heikin-Ashi candles work is if you have so these are Heikin-Ashi candles. They're kind of hard to decipher if you don't necessarily know what you're doing. I like to go with like lower term time frame stuff or faster moving time frame stuff because it's just more clear. But essentially, if you have a flat top on a red candle, that indicates strong momentum. And conversely, if you have a flat bottom on a bullish candle, then that's just continuation to the upside and more momentum to the upside. Now, when wicks appear at the top or bottom, so if wicks appear at the top of bullish candles, that indicates, at the bottom of bullish candles, that's weakness. Conversely, if wicks appear at the top of bearish candles, then that indicates weakness. And as you can see, there was chop and continuation. And once you see that, you want to see these dojis, right? These dojis are just clear reversal indications, whether it's like from a 2 hour perspective or, in this case, like a 2 hour perspective, 3 hour perspective. So yeah, and sometimes you don't get them. Sometimes you do not get clear reversal signals. And yeah, but right now we are kind of getting multiple doji candles, so there is a indecision situation going on here. I would even argue that this is a doji candle in terms of momentum, so it's going to be a grind. We are still under the exponential moving averages on various time frames. So I can't necessarily say that it's going to be a clear sweep to the upside. At this point, we're still below 19.8. But my base case here, especially on the hourly right now the TSA is kind of having a moment where it's getting rejected off of the zero line. So the zero line from the from the TSI perspective is more so the fake out zone. There's a lot of like, oh, okay, it's gonna pump and then dump here, pump and dump here, or it's gonna hover around this zone until it makes a decision. So yeah, going back to the 37. Now we did have a cross down, and momentum is to the downside. So as long as price is below 19.321, then we are going to see some consolidation. But like I said before, 18.938 is kind of the line in the sand for me. This theoretically could go on for hours. This zone, this could go on for like a couple days or whatever. Momentum is to It's a little indecisive, but for my initial eye test, momentum is to the downside just because of on the bottom you can see volume on the faster moving time frames. Um, but there is some indications of a potential reversal here. So we have hidden bearish divergence playing out right now, which is why some indicators are red. But from my knowledge, hidden bearish divergences, my goodness, are considered weaker. So this, I wouldn't expect to open up a fresh short or anything like that. There was just a reaction off of a support level right here. So yeah, right now, where would I consider any movement or any decisions to be made here? At this time, I am expecting price just broke back into the broadening wedge, so that shape and pattern is being respected. So literally, I mean, we could see a bounce from here and an epic reaction, or we could see conversely, um, a bounce here, a break to the upside, and then consolidation. Or we can literally just see, because these broadening descending wedges have higher percentages of breaking to the upside, but as you've seen, there are fake outs like that, but confirmations of possibility of actual pressure breaking down. So there could be, something like that as well. Oh, whoopsie daisy. Oh crap, there you go. Okay. But yeah, so it's been very, very choppy. This stuff is like super bipolar at this time. No trade from my perspective. Higher term time frames are saying one thing, shorter term time frames are saying the other. But what's consistent here are my zones. What's true and consistent is these lines right here, this broadening descending wedge. Now, there was a little bit of a fake out from this Adam and Eve pattern, which is a shame because one of my friends was like, "Oh, hey, check this out! It's an Adam and Eve pattern," and immediately, somewhat of an invalidation. But you did have a lower high. You did have a lower high from a local standpoint, so it's technically still structurally there, but the fake out to the upside all the way down kind of does indicate some manipulation or some big players really kind of shaping the chart in their favor to really to just wipe people out. So um, I would more so concentrate on these broadening wedges at this time. So for now, I am going to not classify or consider this Adam and Eve pattern, which was this pattern breakout here, until I get there. I'm not going to assume that price will eventually hit this spot given the reactions here with support playing out at 18.7 and a pattern horizontal support line at 18.9. So far, this actually is more valid at that point. I could argue that this has become pretty solid, especially with the higher low. Now, the candle patterns are saying one thing, the exponential moving averages are saying another, like I said before. So it's really rough. I wouldn't be making my bed, so to speak, on any particular move at this time. I want to see stuff play out. This is a test of patience at this time, okay? Because we are seeing new support. We are seeing a fresh resistance line as well. Parabolic SAR is slanted pretty vigorously to the downside, if you can tell. That's not usually a good sign as well, but we are getting a green candle like we did back here. So there's a lot of conflicting data at this time. But anyway, my base case here is if I were to like if I had a gun to my head, if I honestly had a gun to my head, um, price breaking above the 100 exponential moving average for the first time in a while, that was pretty good, because the more you test a resistance, the weaker it gets. So we're actually getting bulls stepping up, trying to build bases and test these exponential moving averages to slow it down at the very least. So if you can look at this slope line, if this pump didn't happen, the slope would have been more vigorous and intense to the downside. But now after this pump, it's becoming a little bit weaker. So I do think this has been played out. I if I had a gun in my head, I would expect a slow, gradual, just stagnation and an eventual break to the upside. That's just if I had a gun to my head and I had to choose, I'm thinking something like this. But that doesn't, my opinion is not fact, so far this is still valid, despite the fake out dump, which actually it was a fake out dump revealed to be a falling wedge, which indicated it was going to come back up. So anywho, I just wanted to update you all on like my perspective on what's going down. Hope this was informative. I know I was kind of going all over the place. We are truly in a choppy market. If you're a trader, if you're a swing trader, good luck. This is intense. You gotta be real quick on your feet. If you are more so just a speculative investor, I would say keep your cash in your bank account for now. This is the time to just dollar cost average. But anywho, have a great rest of the morning, and I'm going to try to do a video later this afternoon, so have a good one. Take care, bye-bye.